The market pushes higher, then pulls back. Is it reloading for another run? This is Invest with Jacob. Okay, guys, so in last week's video, I gave you two key levels, 5630 and 5668. And I told you that if 5630 broke, the bears could push it down quickly. But if 5668 broke, we were likely looking at over 5700 toward that 5715 area. And that's exactly what we saw. The market tried to spike down through 5630 and failed, and then rallied back through 5668 on its way to 5715. Now the question is, can the bulls reload? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below, where you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, with the move higher, let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500. I've zoomed out just a little bit so we can go over some bigger picture things over the weekend. I did look over the charts to see what kind of bullish setup we have to indeed push higher. I want to iterate that my primary is still for a top to be reached sooner than later and a pullback to occur, and a pretty substantial one at that. However, if the market does continue higher, we need to know where our failure points are, and that's what key levels are all about. Like I gave in yesterday's or last week's video, 5630 to the downside, they were unable to break that, and 5668 to the upside, they did break through that, and we did see them reach our next target of 5715. So that's why key levels are so important. We need to know when and where we're wrong so that we can trade appropriately off of those key levels, because that's all that really matters is how to trade, and then we go from there. So we'll go through the bullish and bearish counts here and look at overall what we're looking at. I still think we're wrapping up F5. We have a very full count to the upside. I would be very skeptical of a breakout toward the 6,000 area directly. I do think we would need to come back towards 4,800 first for that kind of move. However, if price action proves me wrong, then that's what it is. So price action is the ultimate arbiter. And at the end of the day, we have to go with what price says. Right now, we are still looking for a topping area. We did get a pullback, a push higher to a minimal top here, small pullback, and then another high in the 5715 area, our next target up that we talked about. 5725 would be after that. They did give us a good pullback after that, and it does look like another 5-wave move down. The bears have not been able to break support. And of course, until they do, it is a bull market. We have said that repeatedly. However, we would be looking for a top. Again, as I said in last week's video, two things can be true at once. This is a bull market, and also we are looking for this bull market to top out somewhere in this region. So as they pull back off of the high, it does look like 5 down, a little bit of a bounce. If they're able to hold 56.95, then we can see a more direct breakdown. However, they can bounce it a little higher than that, up to about 57.06. From that area, we could see a 1-2 setup to the downside, where the move down yesterday was 1, a bounce up towards 5,700 or so is 2, and then a breakdown as so. The first support level they need to break is the 5663 area. They break through that, and we would look down back to that 5630 area, and then that becomes a major support level to break to the downside. If they can break that, 5600, then 5585, 5520 are your next levels below that. So those are your key levels to trade off of until they break 5663 and ultimately 5630. We have not broken any major levels of support, and it does remain a bull market. So if they are able to hold here, we would look for them to pull back. And they can still stretch higher in this pattern to 5725. And ultimately up to about 5775. Over 5775, and it becomes much more likely we're going to be in a breakout towards 6,000 overall. And in that case, we would view the June low or the April low as a larger wave 4. And then you'd have a 1-2, 1-2 setup. Now I have several problems with this. One, this is much more of an ending diagonal looking structure than it is an impulsive structure. 2, wave 1 of 3 would extend all the way to the 764, which is overextended wave 3, or wave 1 of 3, I should say. And then wave 2 of 3 only comes back a little bit. Usually when you have an overextended wave 1 of 3, you see a much deeper wave 2 of 3. We did not get that either. And then you have the move higher here into the 1.0 area. So several issues with this structure to the upside. I'm very skeptical of it. It is not my primary count. It is not something I am going to entertain until they push over the 5775 area. Once they do that, then they have outstretched what we can call the wave 5 here and would be looking toward that 6,000 as an overall breakout, where 3 would be coming up to hit the 1, 2, 3, 6, pull back, and then extend. And we'd ultimately be targeting about the 6,084 area on the ES, roughly 6,000 on the SPX. So again, not my primary count, not a count I am very excited about or want to entertain. I would want to see over 57.75 before I start to give the bulls that much credit. So overall, still looking for topping under that 57.75 area. Above that, we have to shift our count and our look to the upside. Over on the NASDAQ, now the NASDAQ has been weaker and has failed to make a new high, even though the ES has made 2 new highs, all-time highs, I should say. And the NASDAQ is giving much more signs of turning over and giving us the start to a down move. We still need to see them break support. We still need to see follow through. All of that still is important, but we do have the makings of a move down with a 5-wave move up, a very clear 3-wave move up, and then the start of what would be our next move down. And we would be looking for them to come on down and break through that 20,360 area, break through that and continue. The next level they would need to break is that 19,900 area. And ultimately breaking through this low here at 19,700 on their way to the 19,500 area to complete this wave. And then we look for a bounce from here and then continuation to the downside after that. So NASDAQ does look a bit weaker to the downside. It, of course, could also have a breakout pattern to the upside off the June lows. However, its pattern is not as clean, and quite frankly, ES's is not clean, and NASDAQ's is even uglier, where you would have a 1, 2, 1, 2 setup. However, this is all the way up to the 1.0, which is too high for a 1 of 3 in almost every case. But if this was to play out, it would push toward the 22,000 area on NASDAQ, 22,400 area on NASDAQ. Yeah, 22,441 on the NASDAQ would be the target. But ultimately, this pattern is not even as clean as the pattern on the ES, which is not that clean anyway. So very skeptical of the upside patterns, but we do want to know where we're wrong and make an adjustment. The push through 21,243 would be an area where we'd start to adjust, and we look for 22,441 after that. So bears trying to build some downside momentum here and pull back. Again, they need to break through the 20,360 area first, and then ultimately 19,762 down here, 19,750, to tell us that we are starting a bigger pullback to the downside. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to the webpage. Once you're there, check out our membership plans area. We have 2 incredible monthly plans that both come with a 7-day free trial, because I want you to get in there, make sure you love it, and become part of our trading team before you ever spend a penny. You can cancel at any time. You literally have nothing to lose by checking us out. We also have our 2 educational courses, Elliott Wave for Beginners and our Advanced Elliott Wave course. In the advanced course, we are teaching people how to understand these advanced patterns that we are seeing in this topping area, these diagonals, these advanced fib levels, the double and triple threes, flats, everything that makes the market very difficult to understand. As you can see on the screen, it is helping our traders understand this market in a way that makes sense. However, if this is too advanced or you're just getting started, we do have our Elliott Wave for Beginners online course. This course is helping real traders make real money and finally understand this market in a way that makes sense. It can be very difficult when good news makes the market go down and bad news makes the market go up. And this is why Elliott knew that the news cycles were nothing long ago. He knew that key levels mattered, and he knew what happened when they held and what happened when they broke. This gives you a huge advantage over the rest of the market. This course is 25 videos where we go through 3 parts: your introduction, where we go through the expectations, your mindset, the KISS method, and why this works. Your chart setup and tools, where we go through all of the chart setup as well as every tool we use with Elliott Wave Theory, how we use it, and why. And the Elliott Wave for Beginners area, where we go through all of the waves, what they look like, how to measure them, how to find these key levels, the theory of alternation, the pivot, everything you need to know to make sense of this irrational market. Now, the cool thing about both of these plans is if you want to get them at a discount and get them together, you can get our bundle course for $37 off of buying them separately. Or if you don't want to pay anything at all, you can simply become a monthly member. as they are included in both rooms. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I spend about 45 minutes going through several charts, going over the counts, answering questions, going through bigger picture strategies, things like that. And people are really loving it, as you can see on those comments. And you also get all the training material you just saw. We trade the SPY and the QQQ. So we do day and swing trade in my room. So we trade quite often. Now, if you're looking for individual stocks, futures trading, income trading, and advanced training, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, futures trading, PT's income trading that is crushing the market, and his reduced risk binary method that gets you in at a cheap price and get you big multiples on your money. And it's how he structures that trade that's so unique. Something you really have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where you put $4,000 into an account, trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we'd love to have you in these rooms so we can all make money together. Key takeaways for today. The market made a high and pulled back. We have two key levels to watch. The 5707 area is our first key level, and the low here at 56.63, and then 56.30 is really the big key level to the downside to watch. If they break through that, we should see some acceleration to the downside. Over on the NASDAQ, looking for them to break down and continue through the 20,360 area. If they can break through that, we would look for continuation to the 19.9 and then 19,700 areas. And then from there, a bounce and continuation to the downside. If they do break higher, they need to break through the 20,800 level. If they can break through that, we would look for them to continue on towards 21,243 next, and then 21,700 after that. Guys, that is your market update for today. I'll talk to you tomorrow.